All right, folks, welcome back. This is our midweek review. It's going to be a commentary on dollar, euro, and cable. All right, so we had a bias shared on Sunday that we would gravitate towards this volume imbalance, run this high, and I'm going to kind of go over why I felt that was the likely scenario, even though I wasn't sure, because I can never be 100% sure on Sundays because I'm talking to you before the market actually opens. But I want you to take a look at this volume imbalance over here. Okay, so the market has traded down into that multiple times ahead of this week starting. The volume imbalance, buy-side liquidity pool, significant displacement to the upside. All those are factors that led to me pointing here and above this high as the bias for the week going into non-farm payroll. Now, what I'll be interested to see is on Thursday and Friday, do we see the market trade up into this here and accelerate, or does it trade up into here and then give back and then come back down below these relative equal lows? Because primarily long term, the dollar is bearish. Now, if it takes out this high, then that to me changes for the near term. All right, dollar index on the hourly chart. You can see the buy-side liquidity pool. This is that low resistance liquidity run signature I mentioned on the weekend. This is the hourly SIBI, sell-side imbalance, buy-side inefficiency. It traded up into that, and we'll see later on the 15-minute time frame how it trades back down into that, acts as support, and goes higher, attacking the buy-side liquidity. I'll count you to go back and listen to Sunday's video because these signatures were the things I outlined as potential delivery mechanisms for price this week. The daily fair value gap, premium high, trades down into it, finds some support, rallies, optimal trade entry, small little volume imbalance there with an order block with optimal trade entry, then expansion to the upside, low resistance liquidity run signature for buy-side liquidity there. And this is that volume imbalance on the daily chart. And this is the fair value gap that we were looking at in previous discussions, but I want to give you the background as to why I was pointing to basically this and running into this area here going into this week. So, like I said, I always have to sit down and tell you what I think is going to happen. And gun to my head, on Sundays, I have to tell you what I believe will be likely delivered on the weekly buys. And here you go, you have it again. Dollar index 15-minute time frame. Here is that hourly fair value gap. We traded into the high of it, above it, and then back down in. Volume imbalance, discount low of the fair value gap on the 60-minute chart. Rallies. Buy side imbalance, rebalance, rallies. Fair value gap, order block, optimal trade entry. Right here. And then runs towards the buy side liquidity, attacking those existing buy orders above that old high. Euro dollars is our daily chart. And I mentioned that Euro would have a relatively easier time to run out its low than that of cable or British pound versus US dollar. And as you'll see, that's what we saw so far for the week. Sell-side liquidity pool resting below here and inside of this buy-side imbalance, sell-side inefficiency. So there was two things drawing for Euro to go lower, and we'll see the contrast of the signatures in cable versus fiber, which is what we're showing you here. Hourly sell-side imbalance, buy-side inefficiency, consequent encroachment, complete closure, breaks down, order block, and 119.40. And around that same area we have the old imbalance that I mentioned, and I can't recall what video it was now, but I got a question from one of the students here, said that they didn't see a sell here. And it's the order block here, and it's the imbalance on the higher time frame. And then we have also displacement, comes back up, fills in this inefficiency, and mean threshold of the bearish order block. Up close candle, split that in half, hammers it after closing it, optimal trade entry, breaks lower, another optimal trade entry here, breaks lower, attacking sell side there. Look at the lows here. Sell side liquidity here, slightly higher low than that of this. So we have a low resistance liquidity run signature on euro that will not be seen when we look at cable. So these are all factors that led to me talking to you on the Sunday commentary and leading to euro would be a better sell and be more refined in the way it delivers price than that of cable or British pound versus US dollar. You can see we had a real nice delivery of it today. Euro dollar 15-minute time frame. All of this in here, this is distortion by time. Okay, I did a discussion on this, and I don't recall what video it is, but I do discuss it in the descriptions, so you can search the forum. It'll be in one of the commentaries in recent weeks and months. Distortion by time, or time distortion. This dealing range high and this dealing range low, all of this is inside of this range. So simply just take the order block, extend it out through time, and then when we get to the crossover of the 30th, Judas swing trades up into it, order block, cut through all these candles. This is the reason why I like to always thumb my nose at everyone that says that what I'm teaching is supply and demand, because supply and demand wouldn't cut through all of these candles. We do, because the logic is based on this right here creating that dealing range high. It's not the candlestick that makes you an institutional trader. It's the logic and narrative behind the price action that gets you in sync with institutional trading. You're not going to be an institutional trader unless you work for a bank or an institutional firm, period. But you can trade like institutions and, or like I teach you, interbank traders that get in sync with these types of moves. So at midnight here, the opening price, we rally above it there into the order block, cutting through all of this distortion and right back to the underlying narrative, which is the order block, which is inside of this dealing range. We did not break this low until here. We have an order block here, the last two up close candles prior to this displacement on the downside, fair value gap, optimal trade entry here, sells off, returns back into the order block, sells off again, small little fair value gap, institutional order flow entry drill right there, continuation down into the old low, beautifully delivered. All right, cable or pound versus US dollar daily chart. And as you can see, we did not make that run on that low. Now, let's talk about reasons why I said that euro would be a better short than that of cable. Notice that we had this low already breach this low. So it's already traded lower for sell side liquidity. Even though we expected price to be bearish inside this balanced price range, price did offer displacement on the downside. It did trade lower. It did offer pips. But when you're looking at signatures and liquidity pools, understanding and differentiating the two, when is one pair likely to deliver and another pair not? Okay, I'm going to kind of like cover that a little bit here. This low had already taken out sell side. So inside of all of this price range up here to here, we already exited that range with this run on this low. We went below that low is basically what I'm saying. We traded back up into the balanced price range right in here and then broke lower. Notice that we did not go back to this old low like support and resistance would have expected to see. We didn't get that. We did get a small little run above the area that I deemed as a balanced price range ahead of time. Small little wick through it, but ultimately, look where the bodies are. It's consequent encroachment, displacement to the downside, fails to get back up into that area here, but we'll look at a lower time frame chart and I'll teach you something in addition to that. And then it breaks lower. And in today's trading, we had an immediate rebalance. Okay, so had these lows in here. They're basically the same. We have a nice down candle on Tuesday, and then today's open. We trade right back up and rebalance immediately. And then now we're below the opening price. So this is an immediate rebalance. We'll see these levels here indicated on the lower time frame so that way you know what you're looking at here. But the immediate rebalance is to here. Ultimately, I think, as long as the dollar is going to go higher, that sell-side liquidity pool is in jeopardy. Very minimum, this low is here. Hourly chart, British pound versus US dollar. Here's our balanced price range on that daily chart. Beautiful optimal trade entry there, displacement. Now, look at this right here. Okay, this is going to be one of those aha moments, okay? When you're looking at this little area here, and you don't have all the annotations I have on my chart, you would be thinking, okay, well, price is going to go up here and fill that in because that's one of those ICT fair value gaps. Look closer. We're inside of this balanced price range. We already left the premium high of it and smashed through the discount low of it. What now exists? See that right there? That in itself is another balanced price range. This candle here, up to this point here, and then from that point down, it's one single candle there, one single candle there. So what I'm framing is basically the range of this low and this opening on this candle right there. That starts the balanced price range. Now we overrun that opening price here. That's not my concern. What I'm going to show you is going back to that original opening price right there that starts this smaller balanced price range within a larger balanced price range. Extend that opening price out in time. Boom. Perfect balanced price range discount low. It's this candle's opening. Okay. Notice it does not trade back up to that level there with this candle. And it doesn't trade up to that level again here on this candle. It does trade one pipette above the opening price here. But that's reasonable. Beautiful delivery there. Breaks lower. Order block. Trades back up into it with optimal trade entry. There. Nice displacement on the downside. Sell side. Sell side. Runs through. It doesn't just trade back up to this low because that's support and resistance. It fills the imbalance. High, low, optimal trade entry, closes the fair value gap, and bearish order block, displacement to the downside. Prior to that complete rundown, small little fair value gap there with a bearish order block again. Inside the narrative, what's the narrative? It's trading lower, but recall that it might not trade below that low. Why? Why is that a factor? We have a low, a lower low, and a lower low. Is that low resistance liquidity run signatures? No. We want to see the higher low on the right. Why does that happen? I don't know why I'm thinking that. I'm getting some vibes right now. My ICT senses are tingling. You're probably asking, why does that even matter? What makes it significant, and why does this not become a low resistance liquidity run signature versus a low with a higher low to the right of it? Well, think about it like this. 1, 2, 3 bottoms, or failure swings, or even optimal trade entries set up what? The idea of a buying opportunity. Much in the same way that this right here, like we have high, low, high. This high fails to go above that one. This right here in reverse would be a low with a higher low. Just like this is a really easy bearish sell-off pattern. This is already shown what? It went low, went lower, and ran away. So if it's going to come back down in here, I'm always anticipating that it's going to have difficulty getting through it, like it does here, and then returns back for immediate rebalance. Then it goes lower, but doesn't run right through it. Now, if this would have had a higher low, this would have went right on through it today with no problem at all. It just went right through it, but it didn't do that. The reason why is because the understanding of what the algorithm is looking for. It looks for these areas like this where it has a failed attempt to go above. We don't have that here. We have a low, lower low, lower low. So this is a high resistance liquidity run. I'm not stating that it's not likely to go below that low, because I think it could. But it's going to be met with a lot of down retracement, down retracement. So it can be a little bit more frustrating. Whereas Eurodollar, which is what I called out on Sunday, that would be a little bit more pure in price action. Now, I want to talk a little bit more in closing what led to that also, but let's finish this up with the 15-minute time frame. Bearish order block here, 15-minute time frame, extend it out. Optimal trade entry. Beautiful price action. Fair value gap, fills it back in, drops, imbalance. Not go back to the old low like support and resistance. Go back, rebalance. Order block. Optimal trade entry. London, sell off. Retraces back up in, bearish order block, trades into it, and displays into the downside. Fills in this little imbalance here. Sell side imbalance, buy side inefficiency, and then trades lower. Now, look what's happening here. We have a low, a higher low. You see that? Then it consolidates, drops down. Does this low go through that one? No. It rallies, it creates the high of the day at the immediate rebalance, then attacks low resistance liquidity run signature. That builds up even more liquidity because we have this low and this low. Then it trades through it. See the difference between that and what I showed you on the hourly chart? Higher lows versus this low, 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 like it showed on the hourly chart. Let me show you again real quick. See, we have this lower, 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 low, higher, higher, relative equal to that. Then we can trade through it. This is a low resistance liquidity run signature price move that attacks this here. Where if we have lower low, lower low, lower low, generally you'll find that it has a little bit difficulty getting through those. Not that it can't go through them, it just, the way price runs, it'll behave differently because of those signatures I've outlined here. This is a tail on this candle here. I teach you that that is consequent encroachment. Split that in the middle. Perfect delivery there. So it rebalances all of this and comes right back to the midpoint of that, which is acting as a gap. And then it trades lower. Euro pound. The other reason why I said that euro would probably be a better delivery on the downside is because of this pair here. I showed this also earlier in the week. I showed you this imbalance, and I mentioned that we were likely to see that continue because it had a little bit more upside. Now, if it's going to fill this in, what would be expected after that? Trade lower. So we have small little imbalance in here, and we have what? Low, lower low. So there's low resistance liquidity run signatures here, assuming that it fills in this gap. Then we can anticipate trading down into about the 85.80 to 85.75 level. And we have about right here is where we were showing on the previous slide. Trades up, completely closes it in. One more time just for good measure, and then breaks. Fair value gap, fills that in, and then trades lower. So we got that fill of these right here, but it happened on the initial run there, then came up and filled it. So now we have liquidity resting below here in the form of relative equal lows, and then we have the remainder of this here, and then look close, low, lower low. So this right here is potentially enticing for a non-farm payroll. If we get an expansion on the upside on dollar, watch this for euro pound, and that also would lead well for euro going down more than cable, and or cable consolidating, allowing euro pound to drop. So, or euro dollar going lower, cable being frustrating and consolidating and not wanting to go down as much as euro might, and that would allow this pair to take out that area down here. Okay, think of it like it did over here. So we could see this initial run up, something like that, and then drop down, taking out that sell side liquidity. Well, just like this area here, it's just a bigger version of it right here. Same thing, low, higher low, low, higher low. Bigger pool of liquidity there, okay? And we've already done essentially what we needed to do by rebalancing that. And I like how we did it. We had these highs taken here, lower high versus here. So it can punch through that, it does. Then it goes even one more time higher. So we have buy side taken here, buy side taken here, and then one more time here. Then it goes lower after rebalancing. So I like that. So keep your eye on this. And in here, going into Thursday and Friday's employment data. All right, folks, that's going to be it. Until I talk to you tomorrow, be safe.